Hello, trading has closed on December 30th, 2021. This was quite a day. We gapped up, hit a new all-time high, reversed strongly, and hit our targets. Well, let's start by going over our disclaimer. Now, I have, I think, pretty clear rules, but every now and then I have to remind people what they are. This isn't a channel to brag about what a good stock picker you are. Right at the market's high, I had a few people posting we're going higher. One said basically because I said so. One said it was obvious. It wasn't obvious to me. If you want to brag about your calls or make calls without giving the reasons, there are plenty of places to do it. My channel is not one of those places. I mean, you can go on any number of chat rooms and make calls and not give the reasons. You can get your own channel on YouTube. If your calls are that good that you can just say something and people follow you blindly and it works, I'll subscribe and I'll promote your channel. But if you're not willing to give the reason, as far as I'm concerned, the call is worthless. This isn't a place to brag about how good you are. It's about helping other people make calls as good as yours. And if you don't want to give the reason, that's fine. Just don't give the call on my channel. And people don't turn into the channel to watch me go over the rules. And if somebody breaks them, I'm just going to block them. I've blocked a lot of people already. All right, end of speech. And just remember, I can be completely wrong, and all trades should be at your own risk. Well, we had a call for the pattern with the early low and the late high. We said if it were a weak pattern, more weakness should follow, and this is certainly a weak pattern. Here's what we said. Final hour high doesn't have to be the highest high. When it isn't, more weakness usually comes. We said unless we gapped up smartly, we wanted to see 47.89.84 and ultimately 47.78.07. Well, we gapped up and promptly rallied. So that's good enough for me to kill the time. It doesn't kill the prices, which did print, but I'm not going to take any credit for the fact that they printed today, because that was strong enough for me to take the time off the table. It's not a call that they wouldn't print today. It just says they'll print at some time. It doesn't stop them from printing today. It just doesn't call for it anymore, but I'm glad we don't have these in the way. You'll recall that back here, this was a pattern which typically has a straight line drop. I didn't think this was it. I did say yesterday sometimes we piddle around a bit and the straight line drop comes later, and I think that's it. And when you get that straight line drop, more weakness follows. When this pattern, which is normally positive, is negative, more weakness follows. Of course, what counts isn't today's close, but tomorrow's open. We open up here, or gap up smartly, ideally over this high, and take out this high fast, all this weakness goes away, but I'm not counting on that. I think this is an exceptionally weak pattern here. It still needs confirmation, which is to drop some more. But now I think that the odds are on the side of the bears. During the day, MEJT said this drop wouldn't stick, said this rally wouldn't stick, said this drop wouldn't stick, and that's all played out. This line is resistance, and we stopped right there. Well, even when we hit new highs, I never gave up on this count. I said it was a very pretty count, and I'd like it to work. There's no guarantee in this world. And the only way it would work is if we had an banded flat from November into December. I still think it's possible to count it this way. Here's your A, here's your B. This is close enough to this to not change the ratios. And if that's the right count, once we start dropping, it should become obvious if we start dropping. It doesn't change a thing from what I said back last month, that was the high, that this is a retest at a higher level, and we're going to drop. And we have targets down in the 2900s. Now, I've been wrong before. I've tried to call tops before and been wrong. But if we do drop from here, I think it's going to be pretty hard to recover. Tomorrow's pattern has the early low. It could still gap up. Today's normally bullish pattern was weak. This should lead to more weakness. We gapped up at a higher all-time high, closed under the highs and most of the lows of this week's consolidation. We broke out over the November high but never got confirmation, and that's why I never gave up on the count. Because we have a wall into the close, one cannot rule out gapping up, but I view that as quite unlikely given the clear rejection of the new highs. Bears still need to confirm this breakdown, but now the calendar won't stand in their way. We've had 21 years between 2000 and 2020. We've had 15 declines and 6 advances on the year's last trading day. I think that the odds are now clearly in favor of the bears. I never gave up on the wave count, which had this as a retest of last month's high, which I considered major based on the other indicators I went over numerous times. All bears now need to do is to confirm today's action by continuing lower, and the odds are quite good. The high of the bull market printed today. I've said that before and been wrong. I should point that out. But everything seems lined up to me for the reasons we've discussed. Futures are down as I'm recording it. If we keep dropping here, this is wave blue C down, and wave blue A was over 200 points. So tomorrow has the early low. If bulls want to invalidate this very negative picture, they have to gap and take this high out fast. I'm betting they won't. And I think there's a very good chance we're not going to see today's high, 48.0893, for a long time. Of course, I could be proven wrong tomorrow, but that's how I'm reading it right now. And that's today's call.